What is up, fam? Welcome to the broadcast. If you're watching this back on a replay, what I am going to do is I'm going to live translate the Jerome Powell Jackson Hole Symposium. Wow, it's going to be so fun. Basically, you have to speak a foreign language in order to understand what these Fed speakers are saying. And we just had inflation data come out this morning, lower than expected PCE data, which is what I told you guys was going to happen weeks ago. And as you can see, we had a massive move up on Ethereum and on the stock market. Now, everyone is waiting for Powell to talk in the next 4 minutes. So if you're on the stream right now, please do me one favor. Smash the like button for me. I'm going to try to, I never go live, so I don't know if this is working at all. I'm going to try to share this out on Twitter. Give me a second, okay? So while you're here, if you're here, please share the stream. Please smash the like button. Is anyone here? I don't know if anyone's here. I don't know if it's working. I don't typically go live, okay? All right, we have some sound coming from the symposium, which is good. Okay, can you guys hear that? Give me a second. I'm going to try to share this link out to Twitter so people will come see this. There's 100 people watching. Holy crap. There's 100 of you fools watching me. Amazing. All right, hold on. Let me share this. Everyone smash the like button if you're here. I usually never go live, so apologies in advance if this is terrible. Hold on. All right, please retweet and come hang. Everyone go to Twitter and retweet this. That would be amazing if you could help me out and help grow this stream. As you guys can see right here, I just said live right now. Powell translating Jackson Hole. Please come hang. If you guys could just throw a like on this and retweet it, that would be incredible. I know I'm asking a lot from you guys today, but I never really go live, so I just want to make sure this goes decently. I have comments pulled up. What's up, everybody? What's up, Christoph? What's up, Dave? What's up, everybody? Someone smash. Whoa, I just dropped my phone. What's up? Someone's live from Egypt. Someone's ready. Someone said lost so much. Dang. Dude, were you paying attention this morning? Should have been paying attention this morning, bro. Always calling the market wrong. There seems to be some guy who doesn't particularly like me in here. So that's cool. There's always going to be haters in the chat. That's all right. I love you guys. I'm excited to get this thing going. So I think I have the audio. Can you guys let me know in the comments real quick? Can you hear like some background? Real quick, just listen in. Can you hear them kind of rustling around at this meeting in the background? Can you hear that? Kind of. It's not very loud. They're not making much noise right now. We'll see. We'll see when he starts talking. But anyway, I think I have the audio ready. I think everything's going to work. I think technologically we are in the right place here, which is fantastic. So anyway, a quick summary of where we've been over the past few weeks, guys. I've been telling you guys that there's only a few events that matter, right? So basically number one is PCE data, which just came out. Came out today, and we had a nice response from the market. The next one is Jackson Hole. The next one after that is CPI data. The next one after that is the merge data. The next one after that is the FOMC meeting. Can you guys hear that?
Jerome Powell.
Can you hear that?
Please come to the podium.
The floor is yours. Please come to the podium.
Here comes Powell. Can you hear it? Okay, great. You can hear it and me, okay? Do I need to turn it up or down?
And good morning, everyone.
Here we go.
Good morning, everyone.
Esther, thank you very much for the opportunity
Esther, thank you very much for the opportunity to speak here today.
At past Jackson Hole conferences,
I have discussed
such
broad
as the
topics,
ever-changing structure
such
of
as
the
the
economy,
ever-changing structure of the economy,
conducting
and the
monetary
challenges
policy
of
under high
conducting
uncertainty.
monetary policy under high uncertainty.
Today, my remarks will be shorter.
Today, my remarks
my
will be
focus
shorter,
narrower,
my focus
and my message
narrower,
more direct.
and my message more direct.
Oh,
The
great.
Federal Open Market Committee's
The
overarching
Federal Open
focus
Market
right
Committee's
now
overarching
is to bring
focus right
inflation
now
It's lowering
is to bring
inflation.
inflation
2% goal.
back down to our 2% goal.
No way.
Price stability is the responsibility
Price
of the Federal
stability is the
Reserve
responsibility of the
and
Federal
serves as the
Reserve
bedrock of our
and
economy.
serves as the bedrock of our economy.
Without price stability, the economy does
Without
not
price
work for
stability, the
anyone.
economy does
In
not
particular,
work for anyone.
Without
We
price
know.
stability, we will not achieve
Without price
a
stability, we will
sustained
not
period of
achieve
strong labor
a
market
sustained
conditions
period of
that
strong
benefit
labor
all.
market conditions that benefit all.
The burdens of high inflation fall heaviest
burdens of high
on
inflation
those who
fall
are least
heaviest.
able to bear them. Restoring price stability will take some time and requires using our tools forcefully to bring demand and supply into better balance. Reducing inflation is likely to require a sustained period.
Sorry, echo should be fixed.
Moreover, there will very likely be some softening of labor market conditions. While higher interest rates, slower growth, and softer labor market conditions will bring down inflation, they will also bring some pain to households and businesses. These are the unfortunate costs of reducing inflation. But if
He's talking about pain.
Failure to restore
That's not
price
great.
stability would mean far greater pain.
the U.S. economy is clearly slowing from the historically high growth rates of 2021, which reflected the reopening of the economy following the pandemic recession. While the latest economic data have been mixed, in my view, our economy continues to show strong underlying momentum. The labor market is particularly strong, but it is clearly out of balance.
But
That's
it is
not good,
clearly
because
out of
if
balance,
the market is strong,
with demand for workers
he can hike rates.
substantially exceeding the supply.
Inflation is running well above 2%.
Inflation is
and high
running well
inflation
above
has
2%,
continued to
and
spread
high-
through the economy. While the lower inflation readings for July are certainly welcome, a single month's improvement falls far short of what the committee will need to see before
That's
we're
pretty
confident
hawkish.
that inflation is moving down.
Pretty hawkish so far.
So,
to a level that will be sufficiently restrictive to return inflation to 2%. At our most recent meeting in July, the FOMC raised the target range for the federal funds rate to 2.25% to 2.5%, which is in the summary of economic projections range of estimates of where the federal funds rate is projected to settle in the longer run. In current circumstances, with inflation running far above 2% and the labor market extremely tight, estimates of longer run neutral are not a place to pause or stop.
Uh-oh. He said
July's
neutral.
increase in the target range was the second 75 basis point increase.
And I said then that another unusually large increase could be appropriate at our next meeting. We are now about halfway through the intermeeting period. Our decision at the September meeting will depend on the totality of the incoming data and the evolving outlook. At some point, as the stance of monetary
Data dependent, that's good.
appropriate to slow the pace of increases.
There we go. He said something dovish.
Restoring price stability will likely require maintaining a restrictive policy stance.
The historical record cautions strongly against prematurely loosening policy. Committee participants' most recent individual projections from the June SEP showed the median federal funds rate running slightly below 4% through the end of 2023. Participants will update their projections at the September meeting. Our monetary policy deliberations and decisions build on what we've learned about inflation dynamics, both from the high and volatile inflation of the 1970s and 1980s, and from the low and stable inflation of the last quarter century. And in particular, we're drawing on three important lessons that I'll highlight. The first,
Pretty hawkish so far.
that central banks
Trying to get it so it's not echoing, sorry.
Take responsibility for delivering low and stable
may seem
inflation.
strange
But he
now
usually
that
pivots dovish at the end.
Now that central bankers
on these two fronts. But as former Chairman Ben Bernanke has shown, both propositions were widely questioned during the Great Inflation period. Today, we regard these questions as settled. Our responsibility to deliver price stability is unconditional. It is true that the current high inflation is a global phenomenon, and that many economies around the world face inflation as high or higher than seen here in the United States. It's also true, in my view, that the current high inflation in the United States is the product of strong demand and constrained supply, and that the Fed's tools work principally on
Strong demand.
none of this
Demand is falling off a cliff.
diminishes the
to carry out our assigned task of achieving price stability. There is clearly a job to do in moderating demand to better align with supply. We are committed to doing that job.
Literally, demand already crashed.
The
What is he
second
talking
lesson
about?
is that the public's expectations about future inflation can play an important role in setting the path of inflation over time. Today, by many measures, longer-term inflation expectations appear to remain well anchored. That is broadly true of surveys of households, businesses, and forecasters, and of market-based measures as well. But that is not
Overall, I would say this is basically a nothing burger so far.
well above our goal for some time. If the public expects that inflation will remain low and stable over time, then, absent major shocks, it likely will. Unfortunately, the same is true of expectations of high and volatile inflation. During the 1970s, as inflation climbed, the anticipation of high inflation became entrenched in the economic decision-making of businesses and households. The more inflation rose, the more people came to expect it to remain high, and they built that belief into wage and price decisions. As former Chairman Paul Volcker put it at the height of the Great Inflation in 1979,
Holy crap, he's talking about
inflation
Volcker.
feeds in part on itself. So part of the job of returning to a more stable and more productive economy must be to break the grip of inflationary expectations. One useful insight into how actual inflation may affect expectations about its future path is based in the concept of rational inattention. When inflation is persistently
Dude,
high,
he's really... This is weird. Normally he doesn't go this deep into, like, theory and stuff. I don't know. This is kind of weird.
Focus their attention elsewhere. Former Chairman Alan Greenspan put it this way: for all practical purposes, price stability means that expected changes in the average price level are small enough and gradual enough that they do not materially...
Overall, he's just talking around the issue, trying to say a bunch of big fancy words. The market doesn't appear too scared right now, so I think we should be good unless he says something crazy.
Highlights a particular risk today. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. And that brings me to the third lesson, which is that we must keep at it until the job is done. History shows that the employment costs of bringing down inflation are likely to increase with delay, as high inflation becomes more entrenched in wage.
Don't have headphones, sorry. Wasn't prepared.
The successful Volcker disinflation of the early 1980s followed multiple failed attempts to lower inflation over the previous 15 years. A lengthy period of very restrictive monetary policy was ultimately needed to stem high inflation and to start the process of getting inflation down to the low and stable levels that were the norm until the spring of last year. Our aim is to avoid that outcome by acting with resolve now. So, these lessons are guiding us as we use our tools to bring inflation down. We are taking forceful and rapid steps to moderate demand so that it comes...
We're taking forceful steps.
...to keep inflation at
They're going to raise by 50 BPS. That is not a forceful step.
Thank you.
Is that it? That's it? Are you serious? Hold on. There's no questions? That was nothing. That was nothing. Oh my gosh, that was weak. All right.
Jerome Powell. Our first session.
Hold on. Is there a Q&A?
Assessing economic constraints, maximum employment.
There's no Q&A?
Nicola Fuchs.
That's it? Oh, that's weak. Okay. Well, overall, that was a joke. Yeah, dude. I don't know. I think we're free to go. I think PCE came down, data dependent. He said in the stream very many times. He said, you know, over the course of that short speech many times that we're data dependent. And that's basically what the market needs to hear. Other than that, it was just drivel. It was literally just, oh, Paul Volcker, and oh, we're going to bring down inflation, and oh. You know, I think the market is already saying right now, full send. Like, ETH's already saying up. Bitcoin's already saying up. It's pretty easy when you see the charts. I mean, I don't know. I could be wrong. I don't think he said anything there that was scary. I think the market is ready to pump because of the PCE data. The market's definitely ready to pump because we had low... Yeah, here we go. We're going now. Yeah. That was a nothing burger, guys. Just kind of like I expected. I've been telling you guys for weeks. No one really listens to me, but he's not going to go up there and say anything. Man, well, here we go. Whee! Boom! Damn. It's hard work being right all the time. I'm just kidding. I'm not going to declare victory yet. I mean, he came out with a hawkish tone, which we all expected, right? Obviously, he's going to say, we need to get inflation under control. We have to. But he's just bluffing, and at the end of the day, he's just going to raise by 50 BPS in September, and then they're going to raise by 25 BPS in October, and then they're going to be done. Because the data is coming down, and if the data comes down, there's no reason to crash markets ahead of November elections. I've been telling you guys this for weeks. It literally doesn't make human sense. I don't even know. I don't have anything pulled up, guys. This was like a random stream, but you just have to listen to me. It doesn't make sense to crash markets ahead of elections when the data is coming down, right? When you have PCE data that just came in, right? And you guys should follow me on Twitter if you're not following me already, but like it came in this morning. Where is it? And you guys had 30 minutes to go long, right? 30 minutes to go long here. It's just so obvious, right? If you just look at the data and you think inflation's coming down, that means the Fed can turn the money printer back on. And I've been telling you that for months. And I've been telling you also what's most important is these news events. Everyone is trading these squiggly lines. Everyone, can I get some comments or some likes? Can someone smash the like button on this? I want to see how many likes we can get. If you think that the news, this is the question I want to ask today, guys. Is the news more important than the squiggly lines right now? Than the technical analysis? Which one's more important? Squiggly technical analysis or the news? Let me know in the comments. I want to see what you guys say. Because in my opinion, the news is the only thing that matters, and I think it's shown in the charts, right? Like it's like something happened this morning. I don't know what it was right here. And I've been telling you guys for months that I'm trying to eliminate all of this like disordered thinking that everyone has, right? This is it right here, okay? This is the order of events. So I tweeted this weeks ago, and I've been warning you, but I said Powell's going to toe the line at Jackson Hole. That's basically what he just did. He basically said, blah, 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 we're going to bring inflation down, but we're going to depend on the data. That's exactly what we want to hear. Okay? PCE showed that inflation topped. So both of these are check. The next one is the CPI data comes in the second week of October or September. Then we have the ETH merge, and then they're going to raise 50 BPS in November. Okay? So overall, I'm kind of glad I went live. I hope you guys were able to benefit from this. Everyone's saying news. Yeah. Like for real, it's just the news. It's the only thing that matters is the news, guys. So you guys are smart. You guys are with it. Clearly you have your brains on straight. So, all right, one more thing before I go. What do you guys think price of Bitcoin by next week? 23K, 25K, 15K. Let's just base it on Bitcoin. What do you guys think by next week? We got through 2 events, right? Like I've been telling you. We got through the first 2. Where is it? Right here? No, where is it? Right here. We got through the first 2. These are both green check marks, it looks like. It looks like these are both bullish events. We have 3 more events before the next FOMC meeting at the end of September, excuse me. Where do we think Bitcoin will be next week, and where do we think Bitcoin will be by the end of September? Someone said 23.5. Someone said 22K by next week. 25K, 24K. Yeah. Someone said news can invalidate. Vincent said news can invalidate any support and resistance. That's so good. It's so true. I really believe that too. Prem says 25K. Metric says 19K, 23K. BroSense says $2,200 ETH max. JJ says 23K. 23K. Yeah, it looks like the consensus is kind of somewhere between 23 and 25K for Bitcoin next week. I think that's probably pretty likely. I mean, what else are we going to dump on? If we dump here, it's just, I don't know, it just shows weakness in the market. I don't think Powell said unless I will go back and look through the transcript of what he said, because I was trying to do this live stream and it was a little bit harder to listen in. But just from listening as closely as I could there, I don't think it was anything too hawkish. I don't think the market should lose their minds. The stock market now is not liking it very much. Is there a quote or something that he said? I need to check through on Twitter and see if there was a quote that maybe, because sometimes that happens, right? You have a speech from Powell, and then, the market will just take one of the quotes and kind of run wild with it. And that kind of, determines the direction of the market. So maybe was there any quotes? Did you guys see anything? It was hard with the audio. I was trying to do this live stream. It's kind of difficult sometimes to do everything and not, to actually listen to Powell. So that was the first time I wasn't able to really listen as closely as I wanted to. But overall, his tone of voice was what I expected. He comes out, I'm the big inflation fighter. I'm the big inflation fighter, right? But then at the end of the day, what did he say? He just said a bunch of nonsense and said we're going to wait and see what the data says before we make a decision in September, right? That's basically what he said. And that at the end of the day, that's a nothing burger, and that means that we have space to run, especially until the next CPI data. Again, I think it comes down to these data points, right? Check 1, good to go. Check 1, good to go. If the CPI data comes down significantly on the next print in it's like the second week of September, I think we're clear to run ETH up to $2,300, $2,500 before the ETH merge. I think we just have more runway. I think that's the key. We need more runway, and now we've got a couple more weeks of runway, in my opinion. I don't think he said anything hawkish enough to result in a crash. Maybe he did, and I missed it, but I didn't hear it. I didn't hear it live. I'll keep you guys updated on Twitter if he said anything, but I really don't think he said anything. I don't think so. So that's what I got. Someone said I'm like the Bill Nye of crypto. I love that. Bill Nye, the science guy. I love Bill Nye. Hey, can you guys do me a quick favor? Before I get off, just smash the like button for me so other people can see this. Obviously, I hang out in the Discord every single day of our NFT project if you guys are interested. It's pretty cheap, obviously, at this point. So you just buy an NFT and jump in the Discord. It's fun. And also the indicator, everyone always asks me, what indicator am I using? It's this Trading Alpha indicator. I'll link it below, but it's got these dots, and it really is helpful, honestly. So it looks like, man, Ethereum looks strong, even though the stock market is kind of selling off here, which is interesting. But as you can see, like we printed 2 green dots in a row on the Ethereum chart. Bitcoin was printing green dots, but now it's kind of reversing. I guess we'll have to see. The market's still trying to figure out what Powell said, actually, I think. I think everyone's kind of watching the replay and figuring it out. I'll go look and see if there were any bad quotes. I didn't hear any. I didn't hear anything that was like, that kind of like was like, ooh, that's not good. I definitely heard his tone of voice, but that was expected. I think the market kind of expected that. So you're looking for tone of voice, and you're also looking for like really bad quotes that are like, hey, we're going to hike to 100 points in September. Like that would be bad, but he didn't say that. So overall, I think he said exactly, I think, we'll see, fingers crossed. But I think we're clear. I think we're clear to go. I think he said what I thought he was going to say, blah, 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 blah. We're going to focus on the data, and we'll see you guys in September. So I'll see you guys in September. I'm just kidding. I'll be back before then. But make sure you follow me on Twitter, and we'll diagnose this stuff even further. Anyway, guys, I love you. I want to shout out some people real quick. Where is everybody? I can't see anyone. Anyway, I love all you guys. Thank you for coming. Smash the like button real quick, and I'll see you guys in the next one. All right, see you guys. How do I turn this off?